Hi, in this presentation, we will learn prediction ledger and predictive accounting on S4 HANA Finance. We will take one sales order and we will complete the complete process order to cash, that means from sales order to invoice, and we will see how this prediction ledger or predictive accounting applicable on that. So this is your prediction ledger. Prediction ledger means right now when we are processing any sales order, we don't have any accounting document. With reference to sales order, we don't have any accounting document. But if we'll configure the predictive accounting and prediction ledger, then you are going to get some accounting documents with reference to that prediction ledger. This is we will not say it's a great functionalities, but yes, in industries we can use it, these functionalities. This is just something like prediction. So when we are going to prepare one sales order, with reference to the sales order, we are going to get some accounting documents, and these accounting documents will not be part of your leading ledger, because as these are not the actual documents, so it will be there in the prediction ledger. Even you will find a different document, document numbers will be different, and with reference to the prediction ledger or the sales order, you are going to get all the entries. You will get the sales entries, you are going to get the ledger entries, like your COGS entries, everything you will get, but all are in the prediction mode. Or you will say, with reference to this sales order, this much stock we need to maintain, this much revenue expected, this will be your cost. So that kind of any report you can generate and you can do the analysis. So with reference to incoming sales order. So our activities, the traditional approach is when you are going to create sales order. So sales order, no accounting entry. If you are going to do the delivery or billing document, invoice, then only it is going to reflect in your leading ledger. So far we are working on this format. Now we are going to take one more ledger and we are going to link this sales order. Okay, for this your logistic configurations must be there, which is there. You must have the profitability analysis configuration should be there. It's there, we have. Now we can do this with some basic settings. We can do this, or we can try this one. And this document's also part of your AC doc, and not part of your leading ledger, but we will take additional ledger, but part of your AC doc. And once you will post the actual documents, then our actual delivery will be there, delivery invoice, then it will be linked with your leading ledger. Initially, with reference to the sales order, you are going to get only update in your prediction ledgers, not in the actual ledgers. Prerequisite is make sure that commitment management must be active. So the settings earlier we did when we activated the business functions. So here make sure that commitment management must be active. This one, commitment management must be active, because it's a one alert only, or you can say information, advanced information. So this must be active. Then go for adding some ledgers, or one or multiple ledgers you can add. So I will not create the ledger, already we have the ledger, but it is the same settings how we used to create the ledger. My system is a little bit slow because it's showing restart is due, but I don't want to do now, so that's why it is a little bit slow. Not SAP system, my laptop. So here you need to add one more ledger. Just like we have a leading ledger, non-leading ledger, extension ledger, this ledger also added. So this is not your standard ledger, this is your extension ledger. Extension ledger type, it should be prediction. So from the drop down, select here the prediction. Okay, the last time what we have used, the N2. N2 is your extension ledger, but extension ledger type as extension. This one is your same extension ledger, but extension ledger type is prediction. And this one we want only it should be linked with your linked with your sales order. So manual postings are prohibited. So that's why I've activated this option. Manual postings not allowed. So if I will post some transactions by using this ledger specific entries, then system should not allow me to post the transactions. Let me add the company code, then we will see. So with this ledger, we need to add our company code. Underlying ledger we are using 0L, so that's why it is there. So let me post one. No need to assign any accounting principle here because it is not related to any statutory posting. So it is only prediction. So no need to assign any accounting principle. So if we will post ledger specific entry, suppose. Not possible. Ledger J1 is blocked for manual posting. So no user will post any manual transactions by using this ledger. With N2 we can post because that time we have not prohibited. But here I have prohibited, that means no manual postings are possible. So this you are going to add one ledger. Manual posting you want or you don't want, that is up to you, business requirement, but mostly we will go for manual posting prohibited. As usual, this will come under your same fiscal year variant, whatever we have assigned with your underlying ledger or your base ledger, and the posting period variant, whatever you want, you can assign. This field is open as per the general your extension ledger concept. So this field is open, so you can assign any posting period variant, whatever you want. My system need to restart immediately. Okay, so order created 2 to 7. Now with reference to this sales order, we will check our extension ledger J1. It's too much slow. So we'll select the ledger J1. Check. So you can see some entries are there. Sales account updated, COG is updated. So all account associated with sales, these account entries are there, and you can check what is the document number. Document number started with PA. That means these are the prediction entries. Okay, so if we'll check the leading ledger, so far no accounting entries you will find. So you can also check that one. Like we have not posted anything today related to sales. Nothing. So on the basis of this sales order, now we can expect or we can predict this much revenue expected, this will be our cost, and this will be our profit margin or what we, so you can say. So these are the prediction entries. So this is the only functionalities. By using the prediction ledger, you can predict accounting entries. So this, you can prepare one report by using prediction ledger, and all these entries also you will find in your universal journal. Yes, it okay. See all your prediction entries. So everything is there here. Sales entry, then you have COGS entry, then you have COGS splitting entry. So everything is there. And you can search this document because these are not the actual documents. If you try to search in FB03, you will not get anything. Once you will go for the delivery, then only actual documents will be generated. So on 17th January, with reference to the sales order, to 227, we had posted one prediction entry and we got these entries that day. So here you can see the prediction entries are there, PA documents are there, and all are your original entries recorded with your prediction ledger, like your sales entry credited, sales. So all are your J1 entries, that is the prediction entries. So sales entry, it's a credit entry with how much the value, 20,000. Then we have sales reduction, which is your cost. That is your debit entry. Okay, we will find out that raw material cost 1021. That is also cost. So these are all your prediction entries. So cost, that is 16,190. From where we got? From the COG splitting we got. So 16,190. Then you have set of cost. That is also debit entry 1960. Processing cost, $10.50. Packing cost 0.72. Material overhead 0.14. And production overhead 809.50. Let's add this account also. Maybe sales reduction was not there. That's why it is not coming. So let's remove it. Okay, so these are the original entries which we had posted on the basis of your prediction ledger J1 in advance, and in all the documents you can see these are the the document number is your prediction document. You can see these are the document numbers. Okay, so all are your PA document numbers. Earlier we had posted. Now if today we are going to post the actual entries, we are going to do the delivery and we are going to process the sales invoice, then by default the entries will be there in your leading ledger, because as per your statutory requirement point of view, this will be report in the leading ledger. Then what will happen with your non extensor ledger or this prediction ledger? So definitely you will find the corresponding opposite entries in the prediction ledger. That means sales earlier it was credited, now this was posted on 17th January 20, and if we are going to process today, okay, so this debit entries, sorry, this was credited earlier, so today it is going to debit. So debit 20,000. Okay, and this will be This is impact on J1 ledger on today's date. So this will be, earlier it was debited, so now it will be credit. All your cost is going to credit because this account should be nullified. Okay, and this sales entry should be debit. So this entry is nullified with PA entries. This was the document number was, what was the document number? This one. So this is the document number which we had posted. PA sum zeros 3 6 and J1. So the document number was PA 3 4 5 6 and J1. J1 is nothing but our leading ledger, extension ledger. So on this document, the entries, original entry was posted on the basis of this sales order 227, and I am going to post the actual entry today on the basis of same sales order 227, and we will see the impact. Now this leading ledger entries will be the original entries. Original entry means these entries. So this will be the minus entries from prediction ledger point of view. And this will be your original entries. Right, so I'm going to create the, I'm going to post the outbound delivery with reference to the sales order, which was earlier we did or we posted. So sales order number same. So with this activity, that should be actual document. Previously with this sales order, the COGS account was debited, but COGS account, or right now we will not stick to COGS account because we did the COGS splitting. So that's why we have this individual components are debited, but you can see the debit entries was earlier it was there. Now with this actual entry, you will find current date, your previous entries must be credited and this entries must be there. Now go for the invoice. Okay, so the document posted. Let's see the impact in your J1 ledger. Then those accounts we need to add. COGS I'm not adding. Okay, anyway we are going to get, let's add also 1013. 1022, 1023, 1024, 1025, 1026, 27. Sales account initially recorded with prediction accounting credit entry 17th January, current date 21st January, the corresponding reverse entry posted. Done. COGS account, if here also earlier the prediction entry posted, today's entry posted, but it is zero balance and you know the concept because we did the COGS splitting, so you just ignore this account. Raw material account, previously debit entry was posted, compare with date and the document number. So debit entry earlier it was posted, now original entry posted, so minus entry posted. So in all accounts which was earlier credited, now debited, which was earlier credited, now earlier debited as cost, now credited. Why? Because the corresponding debit entries or credit entries you will find with your leading ledger. So this entry nullified the previous entry, whatever it was there, those entries nullified, because it's a just projection you did on 17th January. If we are going to do the sales order, what will be the impact? This much revenue flow, this much our cost, all these things. Now when today we posted the original entries, so original entries are recorded with your, simply I will change the ledger with original document number. Okay, so this date is now, it is leading ledger, and you can see here with original document number, date, this entry posted. So sales amount credited with 20,000 now with leading ledger. Sales amount credited with leading ledger. Cost entries debited with leading ledger, original document number. It's not PA document number, it's original document. So all your cost recorded with actual cost. And if you check this document, definitely it must be with reference to that same sales order. Okay, so document number 14001. 14001. It's 2020 entry. Let's take the relationship. See, we process the sales order 227 with reference to the sales order. Then you did the outbound delivery, right? So profit center documents we are getting because it's already configured. That's why we are getting. So we with reference to this, we did the outbound delivery, which is current date today. We did the outbound delivery. Then with reference to that, we got the documents, and then we process the sales invoice. And with reference to this accounting document. So once you will go for the actual document, on this date, the leading ledger updated. And previously when we had posted a projection entry, prediction ledger was there.